When it comes to managing debt and maximizing cash flow, many homeowners overlook a financial option, the home equity line of credit, or HELOC. But not all HELOCs are created equal. The first lien HELOC structure can significantly reduce the amount of interest borrowers pay over time, offering a smarter way to access home equity. We have a product called Wealth Builder. It works like a first lien HELOC. At its core, it is positioned and structured to help homeowners potentially retain more capital and reduce interest costs by using their income to actively offset debt rather than letting cash to sit idle. I'll explain an overview of how it works in a few minutes in this video. But first, let's do a quick rundown of what is a first lien HELOC.
What is a first lien HELOC? A HELOC, also known as home equity line of credit, is a revolving line of credit secured by the equity in your home. Typically, homeowners have a primary mortgage, the first lien, and in some cases, a secondary mortgage or HELOC, the second lien. A first lien HELOC is different. It replaces your traditional mortgage as the first lien on your home. This positioning is important because the first lien has priority in repayment if the home is sold or foreclosed. Beyond security, it also offers financial flexibility that can save borrowers substantial interest. How the first lien HELOC structure reduces interest. It reduces the principal faster. With a first lien HELOC, borrowers can use their line of credit strategically to pay down the principal on their mortgage more quickly by reducing the principal faster. Interest accrues on a smaller balance, which means less total interest over the life of the loan. Flexibility to manage cash flow. Unlike fixed mortgages, a first lien HELOC often allows borrowers to make interest-only payments during the draw period. This flexibility means you can reduce high-interest debt elsewhere or invest in opportunities that offer higher returns while still making progress on your home loan.
Is a first lien HELOC right for you? While this structure offers clear benefits, it's not ideal for everyone. Most people park their income in a checking account, earning nothing. Meanwhile, their mortgage accrues interest daily. Our HELOC system redirects all cash flow to reduce debt first, so every dollar works twice, reduces interest, and remains accessible as liquidity.
Some first lien HELOC structures allow borrowers to deposit income directly into the HELOC account. This reduces the daily balance on which interest accrues, effectively lowering interest owed without requiring extra cash out of pocket. It's a strategy sometimes referred to as a mortgage acceleration approach. The first lien HELOC works best if you have a high stable income while keeping a low discretionary spending, and you have to actively manage your cash flow. Working with a financial advisor or mortgage professional can help you understand whether a first lien HELOC aligns with your objectives and how to structure it for maximum interest savings. And now let me give you an overview of our Wealth Builder. It works like a first lien HELOC. It is not for everyone. It is designed for borrowers who have consistent surplus income and want to actively reduce their loan balance quickly. For example, you want to buy a home for $700,000. You put 20% down, and instead of getting a 30-year fixed mortgage, you get approved for the Wealth Builder First Lien HELOC. Now, with a $560,000 First Lien HELOC, this becomes your loan from day one. Your $560,000 loan is structured as a revolving line instead of an amortized debt. It's a first position HELOC that replaces a mortgage. It gives you one revolving loan instead of a fixed loan, plus a credit line like a traditional mortgage market. Now our HELOC system is totally different in a sense that it combines your mortgage, your equity line of credit, and your checking account behavior. Once you're approved for the Wealth Builder, you enroll in a HELOC account where you have your income and expenses flowing through this account. Your income gets deposited into your HELOC account and is constantly flowing against your loan balance. So that immediately reduces your principal balance. Interest is calculated on the lower daily balance. And what makes this really unique is that you spend from the same account. Bills, expenses, etc. are drawn from your HELOC Wealth Builder account. This part sounds simple, but it's actually the biggest psychological shift because we are accustomed to having a separate checking account, a mortgage payment, and a few credit cards here and there. In the HELOC setup, you're essentially using the HELOC as your checking account, home loan, and spending account. So it's one central account for everything. How the money actually flows. Your income hits the account, then your balance drops temporarily. You pay your bills and life expenses per month from the same HELOC account, and your balance goes up. You're constantly moving the balance up and down. But during the time, interest was calculated on a lower balance. The key difference with a traditional fixed mortgage is that the balance only goes down when you make a payment, and interest is based on a slow amortization curve. With our HELOC system, the balance changes daily. Interest is calculated on the daily balance. It's a simple interest, daily calculated loan. Interest is always being charged, but it's charged on your current loan balance. If you keep most of your income parked in the account, that immediately reduces your principal balance and interest is calculated on that lower mortgage balance. When your mortgage or principal balance stays lower, less interest accrues. Over time, interest savings compound.
This structure lets your income temporarily reduce your mortgage balance as soon as it hits the account, even if only for part of the month. That's where the savings come from. Instead of money sitting in a checking account, it immediately offsets your loan, which can reduce your interest over time and give you continuous access to your equity. Instead of money sitting in your checking account, it immediately offsets your loan, which can reduce your interest over time and give you continuous access to your equity. To find out more about it and how to apply, please click the schedule an appointment with me. I've added the link in the description box below. Thanks for watching.